Reserve meeting minutes and economic data. Hello and welcome to our weekly outlook. Last week ended with increasing US producer inflation and a sharp drop in consumer expectations and estimates. On the other hand, Chinese regulatory curbs remain in their place while S&P 500 in a record high. In the week ahead, while still we have these concerns with increasing coronavirus infection all around the globe, economic data including GDP from Japan and Eurozone, inflation from Canada, UK and Japan, RBNZ meetings and FOMC meeting minutes all will be in the spotlight. Let's take a look at the most important news and events of the week ahead. Number 1. US retail sales. After Monday's Chinese data, another retail sales of the week which we have to follow that closely is the US retail sales on Tuesday. Same as China and many other economies, retail sales responds to many other factors, sometimes increase, sometimes decrease. However, it seems US stimulus and cash checks were the main market drivers. These unemployment benefits will end in September. Retail sales directly depend on consumer confidence, which sharply decreased in Friday's Michigan University's data. On the other hand, we have summer holiday, which can support the sales. So while market participants are waiting for 0.2% decrease, it's really confusing and getting hard to predict what will happen. Number 2, UK unemployment. With fast improvement over the last few months, unemployment rate fell back to 5.8% in June from earlier 7.2%. With easing the restrictions, even with 1 month's delay, the environment remains positive, especially with the vaccination improvement and summer holidays. The last research of the Bank of England was more optimistic for the labor market. Earlier this year, outlook was much higher, and now it's decreased to 5.2% unemployment rate for 2021 and 4.7% in the second quarter of 2022. With this outlook, British FTSE still seems to hold its overall uptrend. Number 3, New Zealand interest rate decisions and monetary policy. The Reserve Bank of New Zealand will meet on Wednesday, as it was the first major central bank to start tapering the asset purchasing. Now we are waiting to see it as the first central bank to raise the interest rates. To get to this point, strong job data was very important. So far, the expectations is for 25 basic point raise into interest rates. On the other hand, we have some risks here, including virus development and Chinese regulations that can decrease the recovery pace, which can highlight as the reason for holding the current policies. With the estimated rate hikes decision, Kiwi is expected to maintain its strong position against its crosses. And finally, number 4, Federal Reserve meeting minutes. On Wednesday, when the Federal Reserve will release the minutes of July meeting, the policymakers' view on the interest rates and tapering timetable, as well as the economic recovery, will be more transparency for the investors. With the solid recovery in the labor market, many market participants and investors are now pricing more on hawkish policies. At the same time, some FOMC members also mentioned that the tapering could announce in September meeting and start from November or even with the beginning of a new year. As we will not have the Federal Reserve meeting in August and September meeting seems so far away, these minutes do not appear to affect the market so much. Thanks for watching this video and hope the rest days of the week will be amazing for you.